Hey guys, Mike here. So happy Friday, and boy, what an interesting day in the market it was. Let me tell you, because it was kind of like, what's going on? There's two big things that really, well, actually three, that held the market where it was today, right? No big, huge moves in either direction, right? And there was something this morning that put us in the red right away, which we're going to go into, because again, this banking thing, I guess it's like a virus, right? It just spreads. Okay, and so as I told the members, and we're going to get into the banking, the charts, some other news to come out. I'm going to show you this snowball effect it has, right? And why a banking crisis, or whatever you want to call this, fear and contagion in the banking system is a bad thing. But as I told the members this morning, this is what started off the day right here. Right off the bat, pre-market, of course, here comes another bank. This is Dutch Bank this time, drops 15%. Because they're worried about them defaulting and being in trouble and all that good stuff. I mean, it's nothing new here. We continue to talk about the stress on the banks, and you can see these are those credit default swaps we talked about. And you can see, I think they're basically baking in like a 31% chance or something this bank defaults, but who knows? I mean, we'll see. You know, I told you there's blood in the streets. They like to pounce on them. And I don't know what's going on with Capital One, but one of our members brought this to our attention. But look at the credit default swaps on, Capital One of all banks. Look at that. So I don't know what's happening there. I'm reading up on that now, and he provided a lot of good information on that. So keep an eye on that one. But here's what happens. Here's the effect that happens, right? Let me take you through a little story here. First, this came out today. What happens when there's a bank crisis, whatever you want to call it, bank fear? All of a sudden, we start rushing into cash, right? It's the fastest we rushed to cash since COVID. It says cash inflows hit largest since March 2020 at $143 billion, right? And you can just see right here, these are something that's happening with the banks, right? I'm going to go into a bunch of stuff for you. These are deposits. You look this up on the Fed. This is from the Fed. And you see that little line down there? All commercial banks deposits, right? I can't tell. This goes back to 1974. We never went below the line of zero. And look where we're at now. I mean, falling off a cliff, right? And of course, I mean, everybody's like, don't worry, it's okay. We're fine. We're fine. The reason why is because these banks are just absolutely taking full advantage of what the Fed is offering, right? I mean, look at this right here. This is, remember I told you that discount window where they can borrow, usually take a haircut, but they give them a discounted rate. Look at that, highest you've ever seen it. Fed discount window usage. You can see that one right there. Boom, spiking like crazy. I mean, they're taking out hundreds of billions here. I mean, it is insane. And what are they doing with it? Hoping they can cover deposits, but I'd be curious, and I'll talk about in a minute what they're really doing with this money. And it's not just here. Our Fed said, what the heck, man, you're going to take some money from us too? So you got a $60 billion drawdown from the foreign central bank facility. And you just look at that line. Look at that. I mean, go back here. You see anything like that in 2020 or anywhere else? Look at that. That is amazing. And I found this article with it because what it says is they don't know who actually took it out, but it says the Federal Reserve facility that gives foreign central banks access to the dollar funding was tapped for a record $60 billion in a week of banking stress. And it says someone somewhere needs dollar funding, right? So, and of course, what else usually happens? You flee to safety, right? So what happened today? Utilities outdid them. Real estate's always up there. Healthcare, that right there is a Treasury 3X leveraged bull ETF, by the way. And then you look at where tech is, and you got to scroll on down. There it is, way below a whole lot of others. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. So you see there's this vicious cycle, right? Where, okay, there's panic out there, but oh my God, I'm going to withdraw my money out of these banks, go put them somewhere else. You know, I'm looking at the Capital One thing thinking, what in the world's going on there? And but you see what banks are doing, and let me know in the comments, like, what do you think they're doing with all that money? And I don't know if there is restrictions. I haven't been able to find anywhere where it says there's restrictions on what they can do with the money, right? Because usually the government is pretty good about just handing out money. And so, are they actually just going to be sitting there, letting it sit there to actually cover deposits if people keep withdrawing the money out? Or are they going to, I don't know, use it to buy back stock, use it to pay bonuses, use it to maybe invest it in something that they know the government's going to be propping up and pushing up? I mean, seriously, what are they going to be doing with the money? Put down in the comments what you think there. Because I find that, past behavior predicts future behavior. And normally they do the wrong thing or something that's in a gray area, so to speak. Not illegal, of course, because usually the government puts no restrictions when they do this. And that's what they did in 08. And they go, they're going to do the right thing, right? So hopefully, because that's a boatload of money they're taking out, right, to do this. And so, going into the charts, you can see with SPY, and I told you in that shaded area, right? I said that is a tough area to get through if you're trying to get this market to go down, because a lot of demand there. And you can see what was going on today. It was all about the 200 and the 100, right? I was sitting there watching this in the morning, got rejected 4 different times, finally broke through, bam, take off, algos kick in, and then we come to the 100, get rejected, can't quite make it, and at the very end of the day, it pushes above the 100 moving average as well, right? And you can see the volume down there and stuff. But, this is what we're talking about. And I don't know, again, that area right there, for those of you who want the market to go down, got to get through that first. And I'm going to show you why that's probably not going to happen anytime soon. And again, what did we talk about yesterday? I showed you this right here today. I said, look at all of these puts with weekly options expiring here, right? If you're a market maker selling this stuff, where do you want the market to go? Flat, relatively is best. Up would be even better, but certainly not down, right? And so that's why you see it for those who are new to the channel. And you can see, guess what? Look at next Friday. Look at next week overall. And we ended it right at max pain today. People thought it was going to be out. It wasn't going to happen. Oh, yeah, it happened. But look at this. Look at all of the puts, right? There's a lot of them, right? Expiring next Friday. And okay, this is going to change. No doubt this is going to change. But there's just a lot there. And so, again, we'll see what happens, but it doesn't look like the market's going to be going down unless something crazy happens. That's all I'm saying. Just you need like another banking crisis or something crazy to happen. Now, Meta, somebody requested this. So I said, if you look at Meta, again, I told you that trend line right there, right? It broke above it. It did a SR flip, right? And so for those who hadn't seen this trend line, it goes all the way back to 2013. That's where it bounced off of in 2018. We bounced off of in 2020. Bounced off it multiple times going through 2022 until we finally broke it. And so it's back above that. And so a lot of people want that gap below to fill. Could happen. But if you look at the gap above, right there, you can see it, and I'll kind of pull that out. It's a huge gap, right? And again, what does the market love to do? Loves to fill gaps. Big money loves to push these things up to fill gaps. And so you can see it right there. That was one of those big earnings misses, and the stock collapsed, right? But if you pull your Fibonacci levels from the low to the high right there, you can see where's that golden pocket, at least what I use at 618 to 65, is right there almost at the top of that gap right there. And so, as the market keeps going up, melting up, and you see Meta, even on some red days, still green, right? A lot of big money in this one, pushing up. Again, they did it to Netflix. This is what they're doing to Meta as well, okay? And then we got the Qs. I want to look at the bigger time frame, the weekly, right? And so this just set a new 7-month high, believe it or not, right? Through all this turmoil, tech has still been going up over the last 7 months. And when you look at it on the weekly, hey, RSI is sitting there above the 50, and it's just slowly creeping up. And you can look at the MACD. MACD is coming above the 0 line, and it's been a long time since this has been the case. All right. I mean, last time they got pushed this far below, obviously it's going to be a crash for sure. This was the 2018 crash right there. And usually it's bullish, right? I mean, you see it on tech here, but this is the 08, right? I would say 08 and .com. And you can see the big moves. Now, of course, this is a different time. I get it. We ain't even officially had a recession yet. But again, tech is just something. And really, I'll kind of show you this weekend why this is more than anything else. You'll see it, why this is happening. But, to keep you up there on this, look what's happening. Look at tech. Percent of stocks above a 200-day moving average, 65%. That was in the 40s less than a week ago, right? And then you see where financials are in the toilet, energy in the toilet. Industrial is up to 58%. It's actually improved. NASDAQ 100 up to 61%. And again, I'll show you this weekend, why this is in a way happening. It's just one of those regions you can put on your list and check out and say, oh, that makes sense, right? Because look at the environment. If anybody described you said, what environment is tech not supposed to do really well in? What is it? It's going to be high inflation, high what? Interest rates, right? Low liquidity, this kind of stuff, because a lot of these companies, a lot of zombie companies out there. And so that's why you're seeing a lot more bankruptcies right now, and you'll continue to see that. But again, this whole, people talk about the business cycle. I used to talk about it all the time. I guess I got to bring it back now. But, it's one of those things that we talked about where the business cycle was broken in 2020. Right, trying to figure out what phase are we in, because all of a sudden people are talking about a market bottoming when we've never bottom on a long downward, crash like that without having a recession. Well, now all of a sudden all these tech stocks came way down, and then they're saying, well, recession, maybe it's going to be Q3, Q4, Q1. Well, if that happens, but the tech stocks are already way down, right? Except for a handful of tech stocks. But most of the other ones are down. And so this is kind of, AWS backwards in a way. And so it's just something we're going to play out. But again, this banking thing, I don't think it's going away at all. These small, medium, and one thing that's picking up steam, I'm noticing, is the commercial real estate thing, right? Remember I mentioned it, then it went to the Fed meeting, and then a bunch of other people keep bringing it up and everything. And it's just these hundreds of billions this year, and what is it, 800 billion next year, coming doing all this stuff. And so we're going to see how that plays out. And then, of course, there's always unrealized gains, which, like they say, that's not a problem until it's a problem, right? Until something big happens. But when you're seeing all these credit default swaps, go up, and that's telling you, like, wow, some of these banks are even more risky. Like, the question is, how many banks have to get in trouble before, all heck breaks loose? That's really what you're looking at. And it may not happen. That's the thing. They may just keep flooding with money, and it is what it is. Forget about it. And of course, we'll get to see if any of this is, going to end up raising inflation. They say it won't. Well, we'll see. The numbers are going to, call themselves out. But the market right now, again, people are just kind of sitting there because a lot of people are flowing to cash and trying to play it safe. But the market, again, is sitting there going, are we cutting rates? Because we're saying you're cutting rates. We think you're cutting. We think you're lying, right? And remember, what's the worst case scenario for the big money? They'll just sell what they bought and short the market, sell it back off. That's it, right? And so you hear every Fed president say, nope, we may not keep raising, but we're holding for a long period of time. Most pauses go from anywhere like, 3 months to 6 months normally at the most before there's a rate cut. And always keep in mind, put it on a t-shirt, the only reason the Fed will cut rates if something really bad happens. That's why stocks fall when they cut rates. Because everybody goes, well, don't they go up? Because the economy is really bad off. And if you look at what they projected for GDP, it's terrible. I mean, it's like if I read it correctly, it's like in the negative, right? For like 3 quarters in a row starting at the end of the year and going into 2024, I believe. So that's not good, right? And again, what's the Fed banking on? Even if they pause rates, they know the banking system. They know these greedy son of a guns, right? They're going to cut off the money to the public, right? They're not going to take that risk at all. They find other ways behind the scenes to make money by investing the money they got from the government and stuff. So they also know that. And so they're looking at that as just like another rate hike, right? To try to keep liquidity out and drain liquidity, okay? And so just keep all those things in mind. I know it's a lot and stuff. But anyway, hope you guys have a great weekend. I will end up seeing you Sunday, and we'll go over some earnings. We do got some earnings next week, some other things coming up as well. And then I'll talk to you about the problem with tech. Good Lord. Have a good one, guys.